Worst case, 100% rally from here, and the best case, whatever, depending which asset you choose. So the risk reward is always good. So if you are on the sidelines, look, for most people, you hold less of an asset that's so volatile. So you own less of it. And days like today, when there's liquidation, that's a great day to put some money at work. Now, is this the low today? Who the hell knows? Could it go low the next week? I don't know. But if it does, you should think of it as a gift.
Wait a minute, everyone. Welcome to Bitcoin Zella, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoin Zella offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoin Zella. Subscribe now. In today's video, Raoul Pal updates us on the Bitcoin rally and what's his best and worst prediction for Bitcoin. Also, he advises us to stay away from trading on the volatile markets with leverage, as it can be very risky. So without wasting any time, let's dive into the video.
You've got to think of crypto as the most ludicrous market you've ever been involved in. It has the highest returns, the highest volatility, the biggest drawdowns, the best memes, the most stupidity, the most angry people who hate you because you're involved. It's like everything in the world turned up to 11. So it's the most befitting thing in the world where everyone gets super excited about new all-time high in Bitcoin. It prints the new all-time high, does a massive reversal, and everyone's like, oh, we're poor again now, And it's kind of like the other thing about crypto, unlike traditional markets, it's so easy for regular people to have leverage. So for some reason, even though you warn people and tell people and beg people not to take leverage in a 70 vol asset, they still do it. And so what happens is, it might even be just a small position, but it builds up because they all get confidence. Then something happens and it's like, you get liquidated, you all get liquidated. We cleared out, I don't know, it was $1.5 billion of liquidations in Bitcoin in like half an hour. Market resets and off we go again. So it's kind of, you have to think of it as a computer game. It's so ridiculous. But, as you know, I don't trade any of this stuff. I mean, I was buying all of my crypto back in November, December 2022. I don't think I've bought anything since January 2023. And I've just done a few asset allocation shifts. The idea is just to own your spot, own it for the cycle, and just do nothing. And it's really as simple as that. You get paid to do nothing. I mean, watch this stuff. Solana was up 10x last year. Bitcoin was up 160%. Everything's up 50% this year to date. You don't have to do anything. You don't have to do anything at all. How you got to think about it is, we're getting into price discovery phase in Bitcoin, and most of the other crypto will catch up and we'll all get to new all-time highs in the quality assets. The shitty stuff won't do, but the quality assets go to all-time highs. You don't know how high they go. Usually it's somewhere between 3 and 10 times the previous all-time high. Okay, so even when you're at the all-time high, you've got significant upside from here. If we're not at the business cycle point where things turn lower, which tends to be later on, later in 2025, maybe if it comes earlier, it's the end of 2024. Either way, that's when you get larger drawdowns. So you're going to see 35% liquidations, but you've probably got a worst case, 100% rally from here, and the best case, whatever, depending which asset you choose. So the risk reward is always good. So if you are on the sidelines, look, for most people, you hold less of an asset that's so volatile. So you own less of it. And days like today, when there's liquidation, that's a great day to put some money at work. Now, is this the low today? Who the hell knows? Could it go low the next week? I don't know. But if it does, you should think of it as a gift. For me, it's not a gift because I have no more money to put into crypto. So I just have to watch it. But that's what these are for. So you should not be scared of them. If you have a thesis and you understand and you think, okay, this market's going to go higher over time, then use sell-offs to your advantage to get slightly better entries where, it's less frothy, because it never feels good to buy something and then it goes in your face 10, 15, 20% before rallying. It's always that always leaves a bad taste in your mouth. It's always nice if you can buy something that's on sale for no real reason except people are liquidating positions because they got overexcited. That's a nice time to stop adding to it.
Bitcoin is ending a year-long accumulation spree that began at the end of the 2022 bear market, data suggests. Figures from on-chain analytics firm Glassnode show BTC in accumulation addresses declining for the first time since the first quarter of 2023. Bitcoin hitting all-time highs this week may have sparked an instant sell-off. But behind the scenes, hodlers are already busy taking profits. Glassnode shows that coins held in so-called accumulation addresses, wallets with no outgoing transactions, and at least 2 non-dust inbound ones, are dropping. Beginning February 11, the turnaround began breaking with a year-long tradition and came as BTC/UST returned to $48,000, the top of a key long-term trading range. Since then, accumulator balances have fallen 2.6% to 3,176,293 BTC, $212 billion, and show no sign of reversing. Despite declining exposure, accumulator wallets have historically spent long periods amassing coins at a discount, only starting to sell at the start, not the end, of parabolic uptrends. Looking at balances throughout Bitcoin's existence, a broader accumulation trend in place since mid-2018 remains entrenched, contrasting starkly with a huge reduction up to that point, which began in 2016 just as Bitcoin started to run to old $20,000 all-time highs.
But yes, from a trading perspective, different time horizon for me, great opportunities because you put in one of those big outside days, you put in a demarked top, you had a bearish divergence on the RSI. So, okay, most people are probably expecting a quick downprint and resumption, but maybe because of this structural thing, you have a down, up, down, ABC, nice, slightly longer correction. Or maybe not longer in time, but sharper in price than people expect. That kind of stuff. And I think you're right, it's tradable. But then, where are we in the longer term time horizon? Well, we've probably got a lot further to go. So if you're a trader, you're like, okay, I can trade both sides of this and make money. Now, I'm a terrible trader, unlike you. So I just stick with the long-term pattern, which is bottom left, top right. It keeps doing it over the last 10 years I've been doing this, so why change that? But from the perspective of trading, that's why a lot of people like to trade it if they don't mind volatility. It's tough if you want to use a bit of leverage and do the kind of old school way you might trade bonds. You're just going to get carried out in this. But if you're used to commodity trading, gold actually trades like this. Not quite as volatile, but gold breaks out, fails, goes back down, then goes up. It's a pain in the arse to trade. Silver's even worse. So it's kind of similar to that. This is part of my don't f this up thesis. If you want to get involved, it's life-changing. It's the biggest macro trend we've ever been given. It's the best performing asset in all recorded history in the shortest period of time. And it continues to be the gift that keeps on giving. Everyone writes it off every time it does a down 80%. And 18 months later, it's back at all-time highs, making everybody look like idiots. So the game is not to fuck that up. And the classic way of doing it is using leverage, because you will lose your mind. You will do stupid things like, here is an asset class that goes up stupid amounts. And for some reason, that little voice in your head says, you know what? If I just got 5 or 10 times levered, I could make 10 times as much money. What? Are you bananas? It goes up 100, 200, 300% in a year. You don't need leverage. And so just stop doing that and stop FOMOing. Because, today was a classic FOMO day, right? Most people were like, it's broken all-time highs. And don't do that in crypto. It will make you look stupid. And just have a plan. Stick with it. Don't use leverage. Use the right time horizon. Unless you know how to trade really well, like Tony, don't touch it in that time horizon. Just buy and hold it and forget about it. It's fine.
Yeah.
Steady buying pressure has now led to phenomena never seen before, including hitting an all-time high before a block subsidy halving. Analyzing the current trajectory, Timothy Peterson, founder and investment manager at Cane Island Alternative Advisors, suggested that ETF demand could propel Bitcoin to six figures as early as 2024. It appears that the Bitcoin spot ETF approval launched in accumulation that it sustained puts $BTC at $100,000 by October 2024. An accompanying chart compared unspent transaction output, UTXO, numbers to BTC price performance, noting growth of 0.34% per day. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.